Gbolahan, thank you for joining us today.
Thank you, Esther. Good to be here.
Good to have you, and Happy New Year.
Happy New Year,
Welcome
Esther.
back. This is your first time back on the show. Good to have you for the new year. Now, looking at the way the market has progressed so far, we've seen that aggressive push, and we've seen institutional investors, PFAs, joining in the rally. But it looks like we've seen a bit of steam, some momentum easing. But I suppose at some point investors will book profit. But what is your perspective?
Yeah, definitely. So it was expected that the market was going to lose steam. Market gained 9% last week. And of course, people could not ignore the valuations, quite attractive valuations. Someone said, oh, it's not a January effect, it's a CBN rally. And really because of some CBN policies last year, so yields in the fixed income space are record low. So for instance, 1 year bill is about 5.6%. So if you probably put your funds in a GTB or Zenith Bank, you can get dividend yield as much as 15%. So people could not ignore those valuations. On a P perspective, the Nigerian market is trading at 40% discount to African peers. So I think a confluence of factors, one, the attractive valuation, and you saw that a lot of PE firms are taking position. So it's not really the FPIs that are even taking position, it's more of the fund managers and PE firms that are taking position. So of course, we expect people to book profit on some of the gains that we've seen in the past couple of days.
Now, I asked an analyst this question yesterday, and I'll ask you, what would a good equities strategy for this year look like?
Okay.
Perhaps let's maybe first half of the year, because obviously the market can be quite unpredictable.
Okay, so in terms of strategy, it's always quality names. Really, when market is a bit volatile, when you're not too sure of what to expect, it's always good to go in stocks that have strong fundamentals, strong that are resilient, and strong that have dividend yield. So really, this is going to be like a dividend yield play. So look at stocks that have dividend yield in double digits. So really, why you might not even see a lot of capital appreciation when dividends are paid, you can be sure they're going to get strong double-digit dividend. Also, like I said, strong companies that have strong operational efficiencies. So if you look at the Nigeria capital market this year, the equity market, if you look at the banking stock, we expect revenue to be a bit challenged for some of the CBN regulations. The ADR policy, for instance, they've reduced their bank charges. So in terms of income they're going to make from that e-channel, it's probably going to reduce. The ADR has probably put a bit of challenge to the banks as well. For the consumer goods as well, we think they might struggle a bit, and because if you look at the inflation trajectory, it's been increasing. So the border closure is going to impact consumer wallets.
But sorry to butt in, we have the minimum wage implementation this year, and I'm thinking, wouldn't we see, more household income increase, as it were, for those who would be getting that?
Yeah, so while minimum wage will increase, we expect the electricity tariffs to increase as well. So things are going to go up generally. So consumer wallet is pressured, and of course, we don't expect to see huge volume growth in the consumer goods space. If you look at the telecom space, for instance, as well, so there's the data wall as well, but we expect the mobile agency banking to kick off this year, so that might help in terms of income. MTN, there's been the overhang about the tax issue, but good enough, the AGF came and they withdrew that. So of course, there's a bit of clarity with MTN. And of course, I think that also prepared the kind of rally that we saw in MTN. But in terms of data penetration, we expect to be a bit challenging. Competition is a bit more stifled in that space.
Now, I was just taking a look at the best performing, let's look at the best performing stocks for this year, so far this year. Quite some interesting names. I'm looking at ICO as of yesterday, market close yesterday. ICO insurance up 40%. We have Cornerstone. So we have a couple of the insurance guys. So I'm just wondering, the recapitalization, of course, is an extension of the deadline, but also the mergers that we could see this year. The regulator has already said it's already received, excuse me, some papers, documentation to show that, or at least interest. How do you see that shaping the sector this year, and of course, how investors look at that sector for investment?
Yeah, so definitely we expect to see a lot of mergers, M&A, and we expect investors to position on the side. So I guess for investors that probably have maybe an idea of what is going on, what that might not be public information. So I guess maybe that is driving some of what we've seen. But for the insurance sector, right, a lot of them are penny stocks. And most times when there's a rally, you expect that the penny stocks tend to move much more faster than the larger cap stock. So that's might play the role, and also the fact that the recapitalization exercise that is meant to happen later.
For the banks now, obviously, I know that banks will be key focus for investors this year, especially when it comes to dividend yield. for those who are looking for, those who have come from the fixed income market, looking for those specific stocks, the likes of GT Bank, Access, and I'm looking at, they're actually all in the green this year. GT is up 6%, Access 5%, UBA 21%, Zenith 16%. But I want to take you back to the earnings outlook for these banks, which could be an issue. I mean, the LDR, there have been some concerns about banks being able to expand their credit without, churning up non-performing loans, especially to SMEs and of course household consumers. That could be an issue. But is that enough to dampen investors' sentiment, or investors going to say, okay, we're just going to stick with the guys we know have very strong balance sheets, the Zenith, the Access, the UBA, to forestall or at least to hedge?
Yeah, so in terms of strategy, right, I would recommend that you stay with the ones that have strong fundamentals, strong balance sheets. Those are the balance sheets that are quite resilient. While the banks, we expect the earnings to be a bit challenged, but really on the valuation perspective, the Nigerian banks are still trading at a discount compared to their emerging market peers. If you compare to the Kenyan banks, for instance, Nigerian banks are trading at a significant discount on a P perspective. So we expect to see rally in some of the banks, but like I said, stick with strong fundamentals. So while it might not be like a broad-based rally, the likes of GTB, the quality names that we've always, the usual suspects, I would say, I think you should just stick with those with those banks.
Now, for the industrials, the building materials guys, the cement makers, I'm just wondering, could they have a better deal this year? Now, on the fiscal side, we have the budget returning to the January-December cycle, and we're expecting, hopefully, to have capital votes expended quickly, or at least set in motion. Is this? Do you see investors positioning themselves based on that information?
So for the industrial growth, I expect growth to be a bit minimized. And of course, competition is a bit rife. With BUA coming on board, they have installed capacity, and we expect that to be concluded this year. That's about 3 million metric ton addition to what they already have on ground. Lafarge, recently they sold their South African operations last year, and of course they are going to be more operationally efficient this year as well. So the competition is going to be a bit more stiff in that space. So on a price perspective, while there might be rally, we saw rally down when they announced the share buyback. Those that had CCNM before and when they listed BUA, some of them had as much as 100% appreciation. But in terms of the results, the revenue, in terms of dividend yield for those industrial goods, we don't expect them to be significant in that regard.
Speaking about competition, let's quickly talk about the consumer goods, particularly the brewery guys. They had quite a rough time in 2019. Competition, of course, passing on price increases to, and of course that levy, that tax, that was it tariff?
Yeah.
Import tariff also. So I'm just wondering, is that going to continue this year? Are they going to see some respite? How do you see it playing out for those guys this year?
So to be quite honest, that sector is a bit challenged. And even if you look at the rally, right, while other sectors have rally, we don't even see so much rally in the brewery sector. In terms of consumer wallets, what we've seen is that the value brands have always done very well. But for Nigerian breweries, for Guinness, they seem to be a bit challenged. And quite honestly, I don't see where that significant growth is going to come for the brewery sector.
Now, for the agriculture sector, of course, the two key players are Presco and Okomo. I think I saw them. Okay, Presco is up 10%. Okomo is also up 18.7% as of yesterday. So, of course, given the federal government's agriculture policy, that strong push into supporting farmers and boosting the sector, are investors in for a profitable year with these stocks this year?
Yes. So 2 years ago, we saw those sectors, or that sector, do very well. But of course, last year they took a beating. We expect to see renewed interest in that sector. Like I said, most especially because of the government's agricultural drive. And also some of this border closure also augured well for the likes of Presco, the likes of Okomo. So I expect that sector to still do significantly well this year.
Okay. Well, overall, because I know that at the same time, while obviously we're focusing on valuations and fundamentals, the economy, the broader strength of the economy is also something that investors would be keeping their eyes on this year. I mean, 2.1% is what we've heard the World Bank forecast, IMF 2.5%, but obviously still below population growth.
Yeah.
I'm just wondering, as in, what kind of support would the market get from the economy this year, or how much attention would the market be paying to the economy this year?
Well, really, the economy usually, or the market usually is a barometer for the economy. And what do I think is going to shape the economy this year? Oil price always shapes what happens in Nigeria. Oil, a lot of forecast is about $65 per barrel for this year. The oscillation we saw earlier in this year, of course, saw oil price rally a bit. But the major factor is that if you notice, our external reserve has been dipping, currently at $38 billion. As of 6 months ago, was comfortably over 40 billion. So if it keeps dropping at this level, might probably be about less than 35 billion by half year. And for a lot of people, they think the naira is overvalued because of that. They think the average naira to dollar probably be about maybe 400 naira to a dollar. And CBN has been supporting. So if they keep supporting the naira, last week they supported with about 170 million.
Okay.
Yeah. So they keep doing that. We expect the naira to go below the $35 billion. So oil price, external reserve, we expect all that to shape the economy for this year. But good enough, like you said, the budget has been passed early, and that means we might see a bit of capex spending early. They expect to do some Eurobond issuances. If they do that, we expect dollars to also come into the reserve, and of course that might even push the reserve up a bit.
Okay, Gbolahan, we'll leave it there. Thank you so much for your time today.
Thank you, Esther.
Good to have you on the show. Gbolahan Aina, Head of Investment at Cordros Asset Management.